How do you see today shaping up? What's your Wex word of the day?
Yeah, so my word is actually opportunity. As in, I understand how in hindsight now we can look at the decline that started last week, Friday, into this Monday, which created a buying opportunity for those investors who are willing to put money to work. But for those who didn't, I don't think all is lost. I think we're likely to have a few more similar opportunities between now and the first Fed rate cut to capitalize once again.
All right, so you're seeing a lot of opportunity. I do want to ask you, where are you seeing those opportunities? You and I, we chat about the markets here and there. You like mega cap tech, specifically the Magnificent Seven, with the exception of NVIDIA, but it's not because of the valuation moves. It's not even because of the declines. It's because of how much cash they're holding. Explain that thesis to me.
Yeah, so if you just think about what it takes to weather the storm in the midst of a recession, it's having the ability not only to continue to pay your workers without having to lay anybody off and continue your operations, it's also having the ability to invest in future growth while other people are pulling back. And so I think if you look at the companies that have the most cash on their balance sheet, your Microsofts, your Apples, your Googles and such, those companies have so much cash on their balance sheet that once again they become the safe haven trade, right? So the rotation, everybody's looking for safety. It comes back into mega cap tech once again anyway. And so I think it's a heads they win, tails they win kind of scenario.
I want to bounce some research off you. Strategists out with some research earlier this week, but I really think it still kind of applies. They say in part, going back to 1990, the average inter-year drawdown for the S&P 500 is just about 15%. We're about halfway through that historical average. Excluding the macro that's been associated with this sell-off, NVIDIA is set to report towards the latter half of this month, which may be the final arbiter of the direction for the AI trade and the broader market. You and I we talked about NVIDIA. You don't like NVIDIA too much, but what do you think about this thesis from strategists?
Yeah, so it's not that I don't love NVIDIA. I don't love NVIDIA at this particular price. I think, we've forgotten about the fact that they are cyclical stocks the way the majority of chip stocks are. And so we've allowed ourselves to focus solely on growth and not the fact that that pendulum swings both ways. But more to your point, I don't think necessarily that the AI trade is anywhere close to over. I think maybe in this particular cycle, we're at risk of it cooling a little bit and investors starting to look for immediate returns, whereas before we were willing to focus on investing in growth coming in the next 2 or 3 years. So the story definitely needs to shift to here's how we're able to make money today. But I definitely don't think that AI trade is anywhere close to over.
All right, I want to get to your pick for today. I kind of alluded to it earlier in the show. We've actually been talking about it quite a bit in some updates. It's CrowdStrike. You're a big buyer in cybersecurity. CrowdStrike, since July 19th, has been a bit of a falling knife, and we mentioned that Delta plans to sue CrowdStrike and also Microsoft. Why are you looking to buy CrowdStrike right here?
Yeah, so I've been saying pretty much since Monday that, investors should be focusing not on the yen carry trade, but focusing on finding deals on companies that they loved 2 weeks ago that are now trading at a bit of a discount, right? So you saw NVIDIA fell 14% or so at the open, Tesla about 11% at the open, Apple 10% at the open. CrowdStrike is in that bucket, but more to an extreme case. And so the focus for me was when we get to a place where we believe that the worst of the news is out there, it's time to buy CrowdStrike. If you loved it at 350, then you should absolutely love it at 250. And with the announcement from Delta last week that they have plans to sue CrowdStrike and Microsoft, as you guys teed up, and there was no follow-on headline from any other company saying me too, I think we can feel pretty comfortable that this is about the floor for this CrowdStrike saga.
All right, so if it's the floor for the CrowdStrike saga, what do you think about the rest of the cybersecurity sector? Is that also a buy?
Yeah, well, the cybersecurity sector in aggregate has been a buy for me for quite some time. CIBR is the ETF that tracks that space that I like a little bit more than BUG for reasons we've debated on the show before. But I think that the importance for investors to consider is cybersecurity is one of those sectors right now that regardless of whether we go into a recession or not, regardless of whether companies start to pull back on their spend or not, the one line item in their budgets that can't be messed with is cybersecurity, because bad actors also have an AI wind at their back, the same way that everyone else who's using AI has become more efficient. And so we have to get even stronger in our cyber defense, regardless of what the broader economy is doing.